Good morning, everybody, ladies and gentlemen. Thank you very much for being so many people registering to this event, for being with us today morning. We're going to speak to you today about something interesting, I guess, for you guys, about the new important Russian tax legislative developments, which happened over, I would say, last year and the beginning of this year, which may affect your business activities in Russia. For this event, I'm very pleased to co-present the webinar with my colleague, Kabanova, Senior Associate.
Good morning, everybody.
And myself, tax partner and head of tax practice. To start with, allow me just to remind a few technical details of the event. First of all, the event will last something like 1 hour plus a short Q&A session. So we aim to complete and to finish the presentation around 1 hour and 15 minutes, not more. You can, during the presentation, you are on the mute mode, which means that you don't have the possibility to speak up due to the number of participants, but we are more than happy to welcome any questions you may have with regard to the presentation, and you can post your questions in the question tool on the right hand side of the screen. Okay, so let's start. I would like to give you a few comments about our CMS worldwide. Basically, CMS practice CMS is an international law firm which is ranked number 3 worldwide with a turnover about 1.2 position CMS globally as the 3rd international law firm, integrated law firm in the market. We have around 71 offices around the world, dispatched everywhere on all continents, and we are present in 43 countries. Also, I would like to say a few words about our Russian practice, which is important. We have set up the practice in 1992, which is more than 20 years ago, almost. And we have more than 15 lawyers team in Moscow, a fully integrated practice with 18 partners and counsels. And obviously, we are fully integrated with a full spectrum of tax and legal services on the Russian market.
Okay, colleagues, a couple of words regarding our agenda for today. So we will start with speaking a little bit on some changes to the Russian taxations that were introduced in the end of 2020 and that concerned the rules of taxation of intragroup financing provided to the Russian companies. Then we will speak a little bit about the recent court practice in the same domain. And we will cover the latest clarifications that appeared just this March regarding the deductibility of intergroup costs. And after that, we will also cover some latest clarifications and legislation developments in the IT domain, and we will finish our presentation with speaking a bit about the changes to the international taxation. So starting about the changes to the rules of taxation applicable to the intergroup financing schemes in Russia. So the first topic that we have on our agenda is extension of the tax exemptions that is applicable to the free of charge intergroup financing in Russia. To remind you a little bit, in Russia we have a very specific form of the financing that can be provided to the Russian taxpayers, the so-called free financing that can be provided by the shareholder of the company without any consideration. And this is a very free, very simple form, we could say, of financing, because it doesn't allow it doesn't require bringing any changes to the company's charter or any registration with the register of the legal entities in Russia, and which is why it is quite easy to use and is frequently applied in cases when the funding is required urgently and the shareholder doesn't have enough time to fulfill the necessary formalities. So just a moment, please. The slides are moving a little bit slowly, so we are on the next slide. Okay. Speaking about the changes that were introduced starting from 2020. Before 2020, this form of financing was quite limited in use because it was only available in cases when the direct shareholder holding more than 50% of the shares in the Russian company was providing the funds. And it was available only for the cash funds and for the property to be provided to the Russian taxpayer. Starting from just a moment, please. Starting from 2020, this rule is materially extended because now this form of financing can be provided not only by an immediate direct company shareholder, but also by the indirect shareholders, which is, of course, good news in case, for example, when the cash box of the group is located in some other company up the chain. And so there is no need to transfer these funds down to the direct shareholder and then to the Russian recipient. The second change is that this form of financing is now available not only to the property, but also to the property rights provided to the Russian taxpayer. And the third change here is that there is this form of financing is now available when the company holds at least 50% of the shares in the Russian taxpayer, because before it was only available in cases when the providing entity held more than 50% in the Russian company. Just one moment, please. Sorry, can we please switch for the previous slide? Okay. So one more condition that is introduced starting from 2020 is that the company providing the funds, this direct or indirect shareholder, should not be located in one of the blacklisted jurisdictions, like, for example, BVI or Marshall Islands and so on. Interestingly, these changes were introduced by the law which was adopted last November. However, they will have a retroactive effect, meaning that any financing provided throughout 2020, even before this law was adopted, will fall under these new rules. And also there is one more condition that we would like to remind you about. It is actually not new, but it is important if we speak about this type of financing, is that if the Russian entity receives any other property apart from the cash funds, for example, equipment or some property rights, it is not allowed to sell this property within a 1-year period after these rights are received. We would like also to speak a couple of words why it is important and also what risk areas still remain for this form of financing, because I started my speech with telling that it is actually quite an easy form to implement because it doesn't require material formalization. However, there are still some drawbacks that should be considered each time you want to apply this form. First of all, this form of financing is frequently applied in case of debt forgiveness. For example, if the shareholder provides some loan facility to the Russian taxpayer, and then this loan is forgiven. So in principle, this is feasible, and if the majority shareholder, direct or indirect one, provides for the loan facility, it can still be forgiven. However, this rule, this exemption will not apply to any interest which is accrued but not paid under the loan arrangement. Russian tax authorities have issued numerous explanations stating that in this case, the shareholder is not really providing the funds in form of the interest, which is why this interest should still be included in the taxable income of the Russian taxpayer, even if the loan principal is not included upon the debt forgiveness. Then another issue that we have here is that, as I mentioned before, the property provided free of charge cannot be resold within 1 year after it was received by a Russian taxpayer. So the issue may occur if the shareholder is willing to forgive any debt payables which are stemming from the sale of goods for distribution. If, for example, the Russian entity is acting as a distributor, it acquired some goods for distribution, and then the shareholder wants to forgive these payables, the exemption will not really work in this case, because Russian tax authorities take the position that these goods are being resold by the Russian entity within the 1 year time, so the grounds for the tax exemption are not met here. Also, the exemption will not work if the shareholder did not provide the funds for the Russian entity immediately, but acquired the payables, the receivables in this case, via some debt assignment. For example, the loan is provided by some foreign sister companies, and the assignment is made to immediate or indirect shareholder under the new rules, and the shareholder is willing to forgive this debt. In this case, Russian tax authorities will not be allowing to apply the exemption. One more issue to consider here is that if the Russian entity is receiving some property or property rights other than the cash funds under this form of financing, this property will be accounted by the Russian entity at a zero value. Meaning that if, for example, the Russian company is willing to resell this property after the 1 year period is expired, it will not be able to recognize any costs related to its acquisition, and will practically be applying the taxation to the total value of the resold property, for example, some kind of equipment or so on. And as you see, these risk areas mainly concern not the cases when the free financing is provided immediately in form of the cash funds, but mostly in cases when you have some in-kind provisions, or in cases when the forgiveness of some previously provided loan facility takes place. And final issue to consider here is the legal qualification of this form of financing. The thing is that Russian commercial law does not allow making the gifts between the legal entities, which is why when this form of financing is chosen, it is suggested to add some economic rationale to the formalizing documents explaining why the shareholder is interested in increasing the funds of the Russian entity, for example, due to increasing its net assets position and so on. And final issue to consider here, which is not reflected on the slide, but which is faced frequently in practice, is that sometimes this form of financing is not really favorable for the foreign shareholders due to their own legal or tax limitations, because they are not really getting anything in return. And which is why, if this form of financing is considered, it is always suggested to seek the advice from a local tax and legal advisor. So that's it for this form of financing, and I'm passing the word back to Dominique to speak a little bit about the next changes that were introduced to the Russian law regarding the contributions made to the company's property.
Yes, thank you, Maria. And indeed, I would like to follow up on a very interesting legal development concerning the deductibility of the contribution made to the properties company. So first of all, I think I should give you some background information regarding the concept of contribution to the property, in Russian. It does not relate at all to what Maria just mentioned regarding the free financing scheme, so-called. It's really a different story. It's about the contribution which are made to the paid-in or reserve account, paid-in capital or reserve account of the company. So basically, the cash does not go to the charter capital account, whereby you would issue some new shares or increase the par value of the share. but the cash go directly to the reserve account without issuance of new shares and without increasing the par value of the share. This is traditionally a very interesting tool to finance the companies because obviously it is quite fast to implement. You don't need to have a shareholder decision on the chart of capital increase, which can be quite time consuming and require some paperwork. With the contribution to the property, it's very expedient, and within 2 days' time, I would say, you can implement such a solution. But up until recently, there was some drawback. Well, there are still some drawback, but at least there have been some improvements which have been made regarding sorry, the disposal of the shares in the company. Up until recently, it was not possible to deduct from the taxable base of the shares which are disposed of the amount of the contribution to the property. So now this is possible, and this is really a good news. And this rule equally applies in case of distribution of the liquidation proceeds of subsidiary. It does not matter when the funds have been actually contributed to the property account, which is also good news. And this new, so to say, incentive applies both to Russian and to foreign shareholders. Still, I'd like to mention also auxiliary provisions, which have been previously adopted, but which are very important, I think, to remember and to remind. Is first of all the fact that the contribution to the property are refundable since 2019, which is also really a good news because before then, this meant that any such cash refund was treated as dividend distribution and subject to withholding tax at source in Russia. So now there is no any more such withholding tax. But I would like to point out right away, as you can see on the slide, there are some risk areas, and on this particular point, if, as I said, from the tax perspective, indeed, now it's crystal clear and there is no more risk in such an operation, still, purely from a legal standpoint, we see in practice that it's still a little bit challenging because this form of property refund is not strictly codified in the law, and in the corporate law, there is no clear guidance as to how such an operation should be formalized, which practically means that if, for instance, you are in a pre-bankruptcy procedure and you want to repatriate cash to the shareholder, it might be a tricky exercise because some interested parties, like the creditors of the company, if they do have some debt receivables against the Russian company, they may well try and challenge the feasibility of this operation. So in other words, this is a new solution which is tax efficient, provided that you would implement it not in the context of a potential claim of interested parties. Another thing which is worth mentioning is that the contribution to the property now count for the double tax treaty investment criteria application, which is a rather good news because previously only the amount contributed, strictly speaking, to the charter capital could be taken into account for that purpose. Among the drawbacks also, I'd like to briefly mention that if the contribution to the property takes place in cash, we don't have a problem. But if, on the contrary, the contribution is in the form of in-kind contribution, then we may have an issue in terms of its evaluation because according to some clarification of the Ministry of Finance and also some limited corporates related to amortization of assets, the tax authorities consider that the in-kind contribution should be booked at a zero value. And you pretty well understand the conclusion is that obviously, in case you would have any such contribution in kind in the form of contribution to the property, if you dispose of the shares in the company at a later stage, then obviously you would have no opportunity to offset the amount of the property contributed. Last but not least, I'd like also to mention, to finish on this part, that contribution to the property, you already understood, is quite a good tool, but at the same time, it's not perfect because you should know that the contribution to the property, as I said before, are not correlated with either some shares or whatsoever. And this means that should you wish, for example, to repatriate the amount which has been injected in the contribution to the property, the amount of contribution should be equally, paid back to all the shareholders equally, irrespective of whom and to what amount has contributed the amount of the property account, which obviously in a joint venture company can be really an issue, because if you only have one participant who contributed to the property, you would reasonably expect that you will only get this money back. And in the real life, it happens that in fact all the shareholders will get a share of the cash reimbursement in proportion to their ownership. Now I'll leave the floor once more to Maria. We're going to speak to you about something new and interesting as well, regarding the temporary relaxation of anti-abuse regulations for intragroup loans.
Yes, colleagues. So the first topic that I would like to cover here is the extension of the so-called safe harbors existing under the Russian law in the transfer pricing domain for the intergroup loan arrangements. In a way of reminder, as many of you should probably know, in Russia we indeed have some specific rules of calculation of the arm's length interest range for the loan arrangements, meaning that if the actually applied interest rate under the intergroup loan arrangements fall within the safe harbor interval, it is considered arm's length by default, and the taxpayer doesn't really need to apply any additional efforts to prove its arm's length character. Before 2020, we were very frequently advising our clients to stick to the possible extent of the safe harbors as being the most straightforward and the simplest approach in terms of the transfer pricing compliance for the loans. However, the big issue here, which became particularly relevant in 2020, is that especially if we speak about the loan arrangements denominated in the Russian rubles, the safe harbor calculation is linked to the so-called key rate, which is established by the Central Bank of Russia. And what we faced in 2020 was a dramatic decrease of this key rate, which made 6.25% at the end of 2019 and is 4.25% now, which practically means that according to the rules that were applicable before this temporary relaxation, the maximum interest rate that could be considered arm's length under the loan arrangement when the Russian taxpayer is acting as a debtor was 5.3%, which is of course materially lower than what we could reasonably see on the market. And many of our clients and more generally Russian taxpayers faced the issue that the group just simply could not provide the loan facility under such a low rate, and some alternative ways had to be sought. And the business society actually was addressing the Russian tax authorities several times throughout 2020 to somehow address this issue. And in the end of 2020, indeed, the safe harbor was a little bit extended. I will not really go in details through all the rates that you see on your screen, because we will also share this presentation. Speaking about the ruble arrangements, it was increased up to 180%, meaning that now the maximum rate that you can apply is not 5.3 but 7.6%, which is of course better, but still not a magical solution, because what we really see with many international groups is that they would rather be seeking to justify the rate of 9 or 10% at least, which is why still in these situations the taxpayers are frequently forced to apply some alternative transfer pricing methodologies to prove the arm's length character of the rate, which is admissible under the Russian law, but will likely create more problems and more questions from the tax authorities, who themselves do not have enough experience to review such kind of analysis. And one more thing which is important to mention here is that these problems that I was speaking about, it concerned either the new loan arrangements that were provided in 2020 and so on, or the old loan arrangements with a variable rate, because when we have some long-term loan arrangement and the rate is fixed, We do not have to review the compliance with this key rate in each period, meaning that we only check it once when the loan is provided, and then it is deemed arm's length till the end of this loan facility. However, if there is a variable rate under the loan agreement, then the taxpayer has to prove the arm's length character of this rate in each period of cost recognition, either monthly or quarterly. And this was actually a real problem for some long-term loan arrangements that we faced, because in the period when they were provided back in 2015 or 2016, the key rate was 9 or 10%, meaning that even the 12 or 13% interest rate was considered arm's length, and then it was decreased so materially. The next topic that we would like to cover is the temporary relaxation of the sin capitalization rules in Russia. Here again, the Russian taxpayers faced some material issues due to this time FOREX fluctuations in Russia, because in 2020, when the pandemic crisis began, we faced some really big FOREX fluctuations, which in fact resulted in application of sin capitalization rules to some loan arrangements that were not subject to limitations before. This is practically the case when the loan facility, the indebtedness under the loan facility is denominated in some foreign currency. Meaning that when the loan was provided, the euro-ruble rate was, for example, 75, and now it makes 90, and the amount in Russian rubles materially increased. So the tax legislators actually a little bit addressed this issue. So now, if the taxpayer has some controlled indebtedness denominated in the foreign currency, and it has to recalculate it for the sin capitalization purposes each time when it has to calculate its sin capitalization ratio, it applies the actual FOREX rate, which is sent by the Central Bank of Russia for the respective reporting period. However, if this FOREX rate exceeds the rate which was set on the 28th February of 2020, which basically when the pandemic crisis began in Russia, then this rate which applied in the end of February 2020 should apply instead. And on the other hand, if the taxpayer's proper capital is also denominated in the foreign currency and it has to be recalculated to the Russian rubles, then any FOREX differences that are taking place between the end of February 2020 and the actual period when such calculation takes place are not taken into consideration. So what is interesting to mention here is that, well, as I said before, these temporary rules are evidently introduced to somehow combat the negative effect of the pandemic crisis in Russia, and which is why these developments were introduced retroactively and apply from 1st of January 2020, although the formalizing legislation was only put in place in November. And one more final point, which is important here, is that, well, as I mentioned, the key rate of the Central Bank of Russia was materially decreased in 2020, but it is still expected that it will go down at least until 4%, which is why this issue still remains very relevant for the intergroup loan arrangement. So that's basically it for the intergroup financing rules, and we are switching for the next topic, and I'm passing the word back to Dominique.
Okay, thank you, Maria, and let's continue on this good news, so to say. Yeah, I'd like to speak a little bit on, Maria touched upon the sin cap rules. I'd like to go a little bit further in the analysis of the new trends on the application or not of the sin capitalization rules. This is a very interesting court decision which has been rendered recently. by the Russian courts. I think the key takeaway for you to really understand what it's all about is to understand that there is a good trend, I would say, in Russia on different topics, on SynCap, but also we'll discuss that on the next slide regarding the detectability of intragroup cost, whereby the courts try to push the tax authorities towards a new approach, which is more based on the substance rather than a formal approach to the appreciation of SynCap rules. Let me remind you, maybe just to start with, the basic scope of SynCaps under Russian law. So basically, the Russian syn capitalization rules with a ratio of 3:1 applies in when you have a so-called control debt, which basically relates to 3 different situations. It's the first case is when the lender to the Russian borrower is a foreign company which owns directly or indirectly more than 25% of the Russian borrower. The second case is when the lender, the foreign lender to the Russian borrower is the lender to the Russian borrower is either a foreign or Russian affiliated party to the foreign entity which owns directly or indirectly more than 25% in the Russian borrower. And thirdly, third situation is where the loan is granted to the Russian borrower is guaranteed through a bank guarantee or whatsoever, pledged shares, for instance, by any of the first 2 categories of foreign or Russian lenders that I mentioned, which own directly or indirectly more than 25% in the Russian borrower. So in these 3 instances, potentially the Russian SynCap rules applies, except for the case when the loan is granted in between 2 Russian companies. So basically, the lender and the borrower are Russian entities, and on the top of that, the lender is not refinanced by another affiliated group company through a back-to-back loan arrangement. So what happened in this particular court case? Basically, the tax authorities applied, as I said already, a very formal approach and decided to apply the SynCap rules between the 2 Russian companies, Element Trade and Mega Invest, due to the existence of a common foreign shareholders. As you can see, we have a Cypriot holding company which indirectly owns more than 25%, both in Element Trade, the lender, and Mega Invest, the borrower. But the very specific features of this case are the following. First of all, the lender, Element Trade, was not financed from offshore through a back-to-back loan arrangement. The loan was provided based on its own funds. Element Trade was not a loss-making company, so it was generating income. And on the other side, Mega Invest, which is also a Russian company, the borrower, was using this loan facility for the purpose of its own business activity. So there was no element of potential tax evasion because the interest income matched with the interest expense, which were both booked in Russia, and so taxes matched with the expense. Moreover, there was no any interest income payments abroad, which could be potentially subject to withholding tax and could qualify potentially as a tax evasion through a tax scheme. And then the result of this, the tax authorities did not suffer any losses. And this is basically the argumentation that the court elaborated in this very interesting decision, whereby they decided the case in favor of the taxpayer and decided that the loan was not subject to Russian syn capitalization rules, and that the amount of the interest paid by Mega Invest in this particular case was fully tax deductible. So this case really, again, is really a good example of the new trends that we can start to see in Russia, of the fact that the tax authorities should try and apply a less conservative interpretation of SynCap rules based on more a substance rather than formal approach. Another interesting development, as I mentioned already, is really the clarification which have been recently issued regarding the detectability of intragroup cost. This is really interesting because, as you may know, there have been quite an increasing number of tax disputes over the last years and months on intercompany reinvoicing. It's really a hot topic, and as you know, all the intercompany research are subject to very in-depth analysis by the tax authorities as part of the tax audit. And this new clarification, as you can see from February 2021, followed some previous clarification of the Federal Tax Service of August 2020, so less than a year ago. Very important. These clarifications, previous ones, were an attempt of the Federal Tax Service to assess the economic justification of the intercompany services research within a multinational group of companies. And in this previous letter of 2020, the tax authorities, the federal tax authorities, attempt to systematize and to develop, I would say, a well-balanced and uniform approach to the both assessment and accounting of this type of intercompany services. So this new letter we are talking about today, of February 2021, is really, I would say, the logical consequence and the further step in the elaboration of a doctrine from the tax authorities on the potential qualification or not of intercompany research as shareholders' cost, which should not be tax deductible, or real intercompany reinvoicing subject to proper supporting documentation. And for that purpose, the Federal Tax Service elaborated in this new clarification of 2021 interesting guidelines on the concept of the shareholders' activity, which is basically pretty much inspired of the OECD guidelines for transfer pricing purpose. And in a nutshell, we can see that there are basically three criteria which should be applied in parallel to define whether or not we do have a shareholders' activity. The first one is that such activity should be really for the economic needs of the shareholders and not that of the participants of the multinational group of companies taken individually. And in simple words, it really means what? It means that it all relates to the group activity of management and control over the foreign subsidiaries with a view to, for instance, make sure that they apply and follow the group strategy and try and meet the, I would say, financial targets, KPIs, set by the group. The second criteria is that, as you can see, the fact that such activity benefits to the multinational group of company as a whole and not to its separate participants. And thirdly, and probably this is the most tricky and interesting criteria, the participant should not would not be acquiring similar services from a third party, nor would they perform any such activity independently. And obviously, this is quite tricky, as I said, criteria, because in the real life, and Maria will elaborate on that in a minute, it's very difficult, first of all, to really understand what is meant by the tax authorities. And at the same time, there are certainly, obviously, a number of situations where, objectively speaking, the taxpayer can reasonably say that he has an economic interest in acquiring the services from the group and not from a third party. So we'll come back to that in a minute, but this is really a key feature of this clarification that you will have to take into account when reviewing or implementing new contracts for intercompany services in Russia. Also, I'd like to mention, as you can see on the slide, that the result of the intragroup services provision should be distinguished from the positive economic outcome of the synergies which are generated on the group level. And at the same time, the taxpayer should be in a position to prove the obvious and definable benefits from the intercompany services. So I confess that it might little bit look difficult for you to catch the essence of the message, but in simple words, it basically means that two things. First, on the level of the Russian purchaser of the services, I think you really need to carefully review all the contracts which are already signed with a view to justify the economic needs and also to explain why, to make sure that you are in a position to explain why you require these services from the group and not from a third-party supplier. And it may well be that as a result of this review, you come to the conclusion that you need to amend the contract in order to put probably more wordings to explain the rationale behind this intercompany reinvoicing. At the same time, and on the group level also, obviously some homework to be done as well. We recommend strongly you guys to review the list of these so-called intercompany reinvoicing that you do perform up until today, and to split in between those which indeed, based on the new clarification, do qualify as intercompany reinvoicing from the other costs which do qualify as shareholder activity. Because the key challenge for you is really to achieve the tax deductibility of these costs in Russia. If these costs are treated as shareholder activity, then the taxpayer will not be in a position to expense them for tax purposes in Russia. And at the same time, as you can see on the slide, it's like a double dip, so to say. Such payment would also qualify as a distribution of passive income, which will be potentially subject to withholding tax in Russia. So it's really, really important for you as a takeaway on this point to double check and potentially reconsider the scope of the intercompany reinvoicing from abroad to Russia. As the last point on this slide, and then I'll pass the floor to Maria, is just to say that on duration level as well, in case we are talking not about the Russian buyer of the services, but about potentially a Russian holding company which owns some Russian subsidiaries, which is in the position to incur some shareholders' cost, it will still be possible for such a Russian holding company to deduct this cost, provided, of course, that they are properly documented and economically justified.
Okay, colleagues, so what is also very interesting in this letter and what makes it a little bit different from some previously elaborated explanations on the same matter is that it contains a quite detailed description of some practical examples of which can be qualified as a shareholder's activity and what should not really be qualified as such. And well, we presented a couple of such examples on the slide, and I will go through them. Actually, these descriptions are much more detailed, and it is really suggested to go through these descriptions as these practical examples and to compare them with your own services and activities, at least to reveal the risk areas. So when the tax authorities are most likely to dispute the detectability of some particular costs, simply because they will take the position that these are not really services, but rather the shareholders' activity which should not be compensated. So the first example is that any market search analysis which is related to some planned activity on the market cannot be deducted by the Russian taxpayer. For example, this is the case when such market research is associated with some new category of goods which are not yet presented on the local market, or some new expectations of the customers, and so on. However, if the market research analysis is conducted by the group and is related to some specific goods which are already presented on the local market, then the Russian taxpayer can reasonably be deducting such costs because this will be considered as some marketing services provided. Another example is preparation of consolidated financial or management accounting statements. Actually, this example is not new. It was already covered by some previous explanations of the tax authorities. But this is actually something to be kept in mind, especially if the Russian regional tax authorities will be interpreting this definition widely, because, for example, the question may take place when you are preparing some CBCR reporting on the group level. So on the one hand, it may concern Russian entity as well to some extent. On the other, this CBCR reporting is presented on the group level rather than locally, because in Russia we have some specific exemptions in certain cases. And the expectation is that even in such cases, the tax authorities may still say that this form of reporting benefits for the group and not for the local entity. Another point here is financial control audit or review of some financial compliance over the group. And this is also quite a disputable question, frankly, because quite frequently we see that the group performs some general control over the financial results of the local entity, and it is justified to some extent because the group has more knowledge and more experience with dealing on the local markets, especially if the company is on the startup phase, but still this is a risk area, and the same concerns the analysis of some investments made within the group. And another very disputable example here is elaboration of some group standards or methodologies or policies to the extent that they benefit to the group as a whole and not to a specific entity of the group. And here we really see a vast room for misinterpretations or formal approach by the regional tax authorities because, well, we all know that quite frequently the results of the group activity are formalized by some general group strategies or manuals that are then applied locally by each entity. And actually these manuals and strategies can have really unique knowledge for the local taxpayer and may really benefit to the local market as well. However, as long as it is formalized not by some specific report provided to the Russian entity, but rather by some group policy, this still gives a room for misinterpretation by the Russian tax authorities. And moving to the next slide, we indeed see a number of risk areas that are presented in this letter, and actually we are even aware that some taxpayers and some chambers acting on the Russian market are even considering to request the tax authorities to somehow annul this letter and to issue a new one, being more precise and more specific. Well, we cannot say that it is really something that is going to happen. It's not what we frequently see on the market, but still. And this letter was actually issued by the tax authorities in order to provide some more clarity for the taxpayers and to stipulate some unified and consistent and transparent approach to auditing this kind category of costs by the regional tax authorities. But what the taxpayers and we as the advisors really expect in practice is that the regional tax authorities, especially other than the Moscow region, will likely or probably interpret this letter very formally. And the wording which is used in this letter, and Dominique was given some examples, is really very vague and it may be interpreted in different ways, and this really creates a room for some additional questions from the tax authorities. Another risk area here, as I mentioned already, is that the letter clearly states that whatever concerns the plan and not actual business activity cannot be deducted by the local taxpayer because it is rather a shareholder's activity. But what we really see with some of our clients and on the markets that sometimes the group can be helping the local subsidiary with launching some new localized products on the market. And it really looks strange why this kind of costs which are related to some local product, although it is a new product, cannot be deducted on the startup or planning phase. Also, this letter, as well as some previous explanations issued on the matter, will likely again put some material administrative burden on the taxpayers that will not only need to collect these packs and packs of documents proving the reality of the services, but will also have to make additional analysis showing why it is a service and not a shareholder's activity, why it was acquired from the group and not the third party. So, well, unfortunately, this point still remains a real struggle in Russia, and when the taxpayer is trying to deduct this cost, it should consider these burdens that it will face on a regular basis to prove their deductibility. Interestingly, also this letter remains silent on the possibility to use the flat allocation keys, which is really a highly disputable topic in Russia. And interestingly, is that before this letter was issued, we were taking place in some online meetings with the tax authorities, and the taxpayers were explicitly asking the tax authorities to cover this point in this particular letter. Unfortunately, this never happened, and in our opinion, under the conservative approach, this still remains a highly risky area. And last but not least, here is what we very frequently see with our clients, is that in the end, the group has to choose, because on the one hand, in Russia, the detectability of this cost is a really hard exercise to document, to prove, and so on. But on the other hand, if these costs do not go down, the foreign entity providing these services will be facing the tax risks in its proper jurisdiction, because the tax authorities there will be saying that, well, you cannot deduct these costs, so they should go to the local entities that they relate to. And in the end, the group may face a double taxation, because on the one hand, this, the foreign entity reinvoicing this cost will be recognizing the income that is due from the Russian taxpayer, and on the other hand, the Russian taxpayer will not be able to deduct this cost. And in fact, it can even go up to triple taxation if the withholding tax applies, as Dominique said. So, well, this is probably it for this topic. So we'll be switching for some next interesting topics to cover. I'm passing the word back.
Thank you, Maria. Yes, I would like to say you briefly a few words, which is rather good news again here about the tax exemption for the long-term shareholders. So basically, there have been some interesting changes regarding the potential taxation of the capital gains from the sale of shares and stocks, both in Russian and, this is good news, foreign companies. So previously, it was only applicable when a Russian holding company was selling shares in Russian or foreign subsidiaries. And from now on, it also applies to the foreign companies. So this is rather good news. But obviously, this is subject to a certain number of criteria, which I do believe in most instances could be met by you guys. The first one is that the shares of the company which are disposed of should not be a property-rich company, meaning that not more than 50% of the company's assets, directly or indirectly, should consist of Russian real estate. Well, save for the exception of Russian high-tech companies, but I guess that this is not applicable to most of you. The other criteria is the holding period, which should not be less than 5 years. And here again, the good news, this is also, this was before subject to polemic and discussions. And now this has been clearly confirmed that the reorganization and reconciliation potentially of the holding company do not interrupt the holding period. So this is rather good news, obviously provided that such reorganization and or redomiciliation is not tax-driven and only motivated by the intention of the taxpayer to evade the payment of taxes. So you should still have a strong business case, especially in the context of the MLI implementation and the test to be passed to make sure that the transaction is not treated as a fraud scheme. The third criteria is the fact that the company should be registered in a jurisdiction which is not blacklisted by the Russian Ministry of Finance. This is also a very important feature, and it basically concerns the jurisdiction with which Russia do not have a tax treaty and or a clause on exchange of information, which basically covers all the usual tax havens like the Cayman Island and others. I'd like to point out still on this slide, as you can see, as a separate point, the definition and qualification of the property, potentially as an immovable property. Well, same probably as in many European countries, we have lengthy and technical discussions in Russia as to the qualification of potential assets as immovable or movable property. And there are at least, I would say, three typical situations where it can be subject to channeling by the tax authorities. The first one is when the costs are still booked as a work in progress. Very often the taxpayer takes position that those costs should not be treated in whatsoever way as a movable property, whereas the tax authorities may have a different position on that. The second situation, in a way, similarly, is when the property is booked but has not passed yet the state registration. So in that case, also it might be subject to some disputes with the tax authorities. And lastly, and probably most importantly, and I know this is also a typical situation in many other countries, not just in Russia. There might be some issues in terms of recognizing some potential movable assets as immovables when they are part of immovable property contracts. So just wanted to draw your attention to this specific point, because this may affect your capacity to apply or not the tax exemption for the long-term shareholder. So just to summarize what I just mentioned, you can see on this chart basically two different scenarios, the red versus the green boxes. Basically on the left side, target 1 in France, target 2 in Russia, provided that there are no property co. In that case, we don't have any problem as long as the seller, the Russian company, owns these targets for more than 5 years. Then the underlying capital gain should not be taxable. On the contrary, you can see in the red box, we have two other typical scenarios where you have target 3 with a property-rich company and target 4 with a BVI company, which is, as mentioned, a blacklisted company, blacklisted jurisdiction. Sorry, because there are no tax treaties with Russia, which is being signed. Then, in that case, on the contrary, the capital gain will be taxed at 20% at source in Russia upon disposal of the shares to the benefit of a Russian or a foreign company. So I think that's it on this part, and I'll pass the floor back to Maria to speak about a very, very important topic, which I'm sure most of you are already aware of, regarding the tax manual for the IT companies.
Well, colleagues, so now we have a little bit less positive topic. Well, it actually goes both ways, but as you probably know, and I will not go into too many details because we covered this topic in terms of some previous events that took place last year, but in Russia, on the one hand, the VAT exemption applicable to the transfer of rights for the software, which was in practice used by many Russian and foreign licensors, ceased to apply since 2021. But for some very specific cases, when such software is registered in the Russian National Register, and this practically means that it is only applicable to some locally developed or locally stored software. But on the other hand, there were some positive developments because the Russian companies meeting the qualification of the IT ones, which again practically means the companies registered as IT companies in Russia, can benefit from some really interesting tax incentives, which include reduction of the corporate profit tax rate from 20 down to 3%, and also material reduction of the social contributions rate. However, application of both the VAT exemption and specific incentives for the IT companies are subject to a number of specific criteria, and when this law appeared last summer, it did not regulate a lot of, technical questions like how it should apply in each specific case for each specific type of software. And since that, especially in the end of last year and beginning of 2021, there was a number of explanations issued by the Russian tax authorities that we would like to briefly summarize that answer at least part of these questions. First of all, what qualifies as an IT activity for the Russian IT company? Because the Russian company, to benefit from these tax incentives, should derive the major part of its income from the eligible IT activity. So the tax authorities explained that both the software development and the adaptation and modification of such software should qualify as an IT activity. However, if the local entity is engaged in installation and testing or maintenance of such software, it can only apply the incentives if this software was developed by this particular entity that is performing this installation or maintenance services. Why is that important? We had some questions from our clients who have local IT companies that are engaged solely in some installation or maintenance or client support, while the main software flow goes from abroad. In this case, unfortunately, these incentives cannot apply because this is maintenance is developed, is performed irrespective of the software which is developed by someone else. Also, a lot of questions occurred. What can qualify as a so-called marketplace software? Because by way of reminder, the activities related to this marketplace software or software used for some advertising or counterparty search or online trade activities cannot really apply either for VAT incentive or for the specific incentives for the IT companies. So in December 2020, Russian tax authorities issued rather detailed explanations with some practical examples of what can qualify and what cannot qualify as marketplace software. As they say, for example, that some KYC software or software related to the electronic documentary flow does not really qualify as a marketplace one, even if it is somehow indirectly related to sales or advertising. However, if, for example, we're talking about some online trade platform, in this case, it will evidently qualify as a marketplace software and the incentives will not apply. Also, some very interesting explanations occurred regarding application of these new rules in transition period, and we really had many of these questions in the end of 2020. And they explicitly say that if, for example, the foreign company was providing some rights for the software in 2020, as the payment only takes place in 2021, in this case, still VAT should not apply to this flow because it relates to the software which was provided according to the old rules which were enforced in 2020. But what is very interesting here is that even if the foreign company received some prepayment in 2020 in respect to some software rights used in 2021, it still doesn't have to make any additional VAT payments in 2021, although these rights are already used in the period when they are taxed under the new rules. Also, the tax authorities issued some explanations saying, answering the question whether it will be possible to, make some kind of a business split and to create a new IT company which will be subject to these incentives. And the answer is basically yes, it can be done. However, this cannot be driven by the sole aim of tax optimization. And the final point that we would like to cover here is that this VAT exemption will apply not only to the main software that will enter the Russian National Software Register, but also to its packages and components. And just a couple of words on the next slide, as we are reaching the end of our time already, is that regardless of this clarifications, there are still a lot of practical questions that we see. For example, if the software is a multi-purpose one and it is used both for the marketplace activity and different activity. And also we have quite a number of questions that still remain open in respect to the so-called electronic services.
for example, whether or not the long expected intergroup exemption will apply for these rules, or if some new regulations will occur for the other services rendered by the registered providers of electronic services. So, well, these questions still remain open, so we will be happy to cover them for you separately or specifically if you have such questions, and then we will move to our next topic.
Okay, so let's to finish this webinar, we'd like, and then we'll switch to the Q&A session. So please do not hesitate to write your questions in the question tool, and we'll be happy to answer any of them once we complete the event. So the last topic here we'd like to mention today is really also something very important, a key trend that you will need for sure to take into account in your tax planning activity. As you can see from this slide, the Russian state and Russian government have been very active in terms of the renegotiation of the tax treaties with quite a number of key jurisdictions for your investments in Russia. And as you can see from this slide, I will probably not go into details, but you can at least see that starting from 2021, new tax treaties have been signed and entered into force with Cyprus and Malta, retroactively to January 1st, 2021. And also starting from 2022, a new tax treaty with the Luxembourg will enter into force. So Russia, due to the crisis, probably the COVID-19 and also the general financial situation of the Russian market, which is quite tough, the Russian government and states we are looking for new instruments to bring more taxes into more payments into the Russian treasury. This is probably one of the main tools which has been recently developed, which will for sure heavily impact the tax treatment of the passive income that you may repatriate from Russia. And you can see on this slide that not only Cyprus, Malta, and Luxembourg are concerned, there are also real concerns regarding the Netherlands, with which, for the moment, no definitive negotiations have been successfully met. And there are some threats that at the end, if no double tax treaty is agreed, obviously, domestic tax rules would apply in Russia. Well, we still do hope that this is not a realistic scenario, but still, for the time being, it cannot be excluded. You can also see that Russia is actively working on some new amendments to the double tax treaties with Switzerland and Hong Kong, which are in the radar. But fortunately, some key jurisdictions like France, Germany, and others are not on the agenda yet. So I don't think it makes too much sense to go too far into the details of this table, but you can see in a nutshell that it's a drastic change in the taxation. If you look at the bold figures, which are after 2021 and amendments to the tax treaties, which have been introduced with Cyprus, Luxembourg, Malta, you see that basically in all cases you have a new rate, which is 15% flat rate, both on dividends and interest for any of these jurisdictions, whereas before we had basically a 5% reduced rate under specific conditions on dividend payment, and even a 0% rate for interest. So it's getting really critical, to review and reconsider potentially the structure you have in place to try and mitigate this withholding tax cost. I have to mention that still, as you can see on this slide, under the new rules in each of these jurisdictions, you still have a possibility to apply some reduced rates, but these rates, as you can see, can only apply basically in the case where the holding company is a publicly traded company, a public entity listed on the foreign market with a share of floating stock, which is 50% or more as a minimum in most of these jurisdictions. So it's really a challenge, and I think you perfectly well understand that it would not be realistic and probably even feasible for most of you to simply relocate to other jurisdictions, or to try and convert the existing holding companies into public traded companies, because, well, obviously you need to have serious grounds for implementing a new structure, and we'll speak about it in a second on the next slide regarding the introduction of the MLI and the requirement for fulfilling the principal purpose test. But it's clear that if you would, for pure tax ground, try and convert your company to publicly traded companies and or relocate in more favorable jurisdiction only for tax reasons, then you may get into troubles. So really, I think you need to carefully and thoroughly discuss on the HQ level as to whether you can realistically try and relocate to new jurisdiction, and for that purpose, you really need to get ready and to document with a serious, strong business case the relocation in any new jurisdiction. And to finish, I would like to say, as I just outlined, there is, and this is pretty much correlated, as you understand, Russia has been actively, the Russian Ministry of Finance has been actively renegotiating with the states and signed some agreements, MLI agreements, with more than 34 states, including Cyprus, Luxembourg, France, Malta, Netherlands, and so on and so forth, Singapore, to introduce the MLI. And one of the key features, as you know, of the MLI is really the principal purpose test, which from now on the companies will have to fulfill to be eligible to the tax benefits of the double tax credits. And according to the latest recent Ministry of Finance letter dated July 2020, as you can see on this slide, in order for the principal purpose test to be met, there are at least three, I would say, general criteria that should be met. The first one is that the taxpayer should be in a position to assess and to communicate on that to the tax authorities the existing tax benefits, if any, of the commercial arrangements which are in place. Also, and probably most importantly, the taxpayer should be able to correlate the share of the tax benefits out of the share of the commercial benefits that it really gets out of this transaction, which again aims at demonstrating that the new structure and or organization and or contractual relationship does not merely aim at tax evasion. And lastly, as you can see also, it is very important as a third criteria to demonstrate the substance of the structure, the tax residency, and the substance of the corporate structure which is in place, and the volume of activity which is performed in the country of residence. And obviously, this probably reminds you the previously introduced back to 2017 provisions on the beneficial ownership concept, which clearly should be read and applied in parallel with the principal purpose test. As you know, certainly the beneficial ownership concept should be is really a key requirement also in Russia now. Since 2017, you have an obligation to formally report on that on a yearly basis to be eligible to the application of the reduced withholding tax rate on the top of the residency certificates and some other documents. And to finish, yes, I'd like to mention that as part of this beneficial ownership test, so to say, you should obviously demonstrate the economic substance in the state of incorporation of the entity, and to demonstrate that it's not a pure conduit or pass-through entity, that it really has its own life, I would say. It really runs a real business activity. It has the authority to manage the assets and income which are booked on its balance sheet, which means that the income should not simply flow up through the ownership chain to an ultimate shareholder. They should be at least for the main part stay on the level of the foreign holding company to be further reinvested in other activities. And lastly, of course, the foreign entity should be staffed, properly staffed, and should conduct a real business activity. So I think that's basically it. And probably as a conclusion of the slide, I want to remind that, as you understood already, in the context of the renegotiation of the double tax treaties on a global level with many foreign jurisdictions we are used to work with to invest in Russia, and in the context as well of the new MLI entry into force, you really need, as a takeaway, to check the potential impact of these new rules in terms of the taxation of the passive income from Russian source, and to take appropriate measures to potentially reconsider the structures of the contractual relationship in a safe tax environment, meaning with a strong business case and proper justification of any such change. Well, I think we are done. Thank you very much for being with us today. We are now happy to consider and to go through the question tool and to see what are the potential questions you may have raised. So Maria and I will go down and through the questions and try to respond within the next 5 minutes, probably, to some of the questions that you've raised.
Okay, so the first question that we see, can the free financing be provided by a sister company under the new rules? Well, yeah, that's a good question. Actually, the answer is no. If we speak about free financing, it is still available only to the shareholders of the company, but now this can be either direct or indirect shareholders. But the cash should always flow down from them, meaning that you cannot use any other cash box on the side and then make an assignment due to the risks that we described before.
Okay, I see another question which probably relates to my slides. Yes, regarding the contribution, how exactly the contributions made to the property in a JV can be deducted if only one of the shareholders sell its stock? Yeah, I think it's my slide number 9. Yeah, basically, it's also something interesting because, in fact, the regulations say that only the amount of the contribution that you perform to the property can only be deducted from the tax base in proportion to the share of the stocks that you are selling. Meaning that, for example, if you have a JV with 2 shareholders, 50-50, and one of the 2 shareholders is selling, contributed 1,000, let's say 1,000 rubles into the property of the company. When it will dispose of its stock, it will only be able to dispose of, if you dispose of 50% of its stock, it will only be able, for example, to deduct 50% of the contribution, which is 500. Okay, so they contribute 500, they sell the share for 10,000 rubles. They previously contributed to the property 1,000, but they are selling only 50% of the share, so they can only deduct 500 from the tax base.
Okay, so I see the next question, which probably relates to my slides. Do the temporary safe harbor rates, I guess for the transfer pricing purposes, apply for the loans provided before 2020?
Actually, yeah, that's a really good question that we didn't explicitly cover. The law says that these temporary extended rates apply only to the new loan facilities which are provided in 2020 or 2021, which basically means, and as I mentioned before, that if, for example, you have a loan facility which was provided back in 15 or 16 with a variable rate, so you have to check the transfer pricing compliance in each period of cost recognition, you will not be able to rely on these rates. However, there is an open question, and we don't really know the answer yet because the tax authorities didn't pronounce on this. What if you have, for example, some long-term loan credit line, and you are providing the funds in different tranches? So we expect that even if this credit line was opened some time ago, and you have a new tranche in 2020, they should still count. But, well, this is an area that probably requires more clarification from the tax authorities side.
Okay. How much time? Yes, let's take maybe one or two more questions and then we'll complete because we are already quite ahead of time.
There's a question of VAT treatment.
Yes, on the VAT treatment in case of requalification of the services into dividends. I presume this is like 14. Can you read switch back to slide 14? Yeah, it's a good point because, well, obviously, if primarily, as we explained on this slide, that you booked some intercompany costs and such services are potentially subject to Russian VAT, it makes sense that at the time of the bookkeeping entry, you also potentially declare such VAT on the VAT return. And what will happen indeed if at the end of the day, as we explained, the tax authorities come and challenge the OPEX, consider it a shareholder's cost activity, it should not be tax deductible for Russian tax purposes. So I think really it's a matter as to what is your VAT position, because well, VAT position on what decision has been made by the company, because more and more often on the intercompany reinvoicing, we see as a management decision that the company do not actually report its VAT, declares its VAT, do not claim the VAT reimbursement, or do not at least declare it in the tax returns for VAT tax returns for offset purpose. And of course, in that case, if any such VAT has been paid but not claimed for reimbursement or offset, then obviously it's probably not too much of a concern for you. And also, it's probably an argument, I would even say, in your favor, in the sense that the tax authorities in that very particular case may decide simply not to challenge you from the perspective of the qualification of the service into a passive income, because they would have probably more to lose than to win, because if it will be treated backward as a dividend, it will be subject to a withholding tax. No, we may reasonably assume in the base case scenario of 5% on that income, whereas the VAT, which you would have potentially not recovered, is subject to a 20% rate. So this is the first case. The other case, which is opposite situation, is where the taxpayer would have duly declared and claimed for the VAT offset or reimbursement, and then of course you may be in a much more complex and tricky situation, whereby the tax authorities may well decide to come and challenge your VAT situation, because obviously if as a result you manage to offset or even claim this VAT back, for sure they will come and challenge you, and on the top of the potential additional taxation on the withholdings to the dividends payment.
Yeah, one more interesting point here is that the taxpayers were asking the tax authorities that, well, in this latter case that Dominique explains, there is evidently VAT overpayment to the budget, because the foreign provider should not be paying VAT on its dividends. And they're saying, well, okay, yes, we agree with that, but he should come and claim this VAT back. You cannot do it as a tax agent. And, well, you can imagine the complexity of a foreign company to going to court with the Russian tax authorities. We cannot say it is impossible, but this is still something that will likely take a lot of time and efforts.
Okay, thank you very much. I see time is running. We are quite far ahead of our initial plans. We'll stop on that. If we see that there are other questions, we'll get back to you separately under separate cover, and we'll respond to any questions raised. We would like to thank you very much once more for being with us today. It was really great to have this opportunity, and that you are so many attending this event. Just to remind you that We will be regularly organizing similar events over the year, probably once in a quarter in average, and we will be happy to discuss further with you some new legal developments. Thank you very much, and talk to you soon.
Thank
Bye.
you. Goodbye.